FX markets today have been pretty quiet, and I'm talking about from the European Open this morning, not the weekend gap. The weekend gaps have made a lot of these things look really, really good, but the actual fact is, from the European Open at 8 a.m. this morning, we haven't seen much of anything. The most of the action happened overnight in the Asia session for a lot of these instruments. Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Now session. I'm going to break down this week's market reports. Hope you're doing well, team. Good afternoon, Cora Tim. Good evening to you, Matthew. And good afternoon to everybody out there on YouTube as well. Good afternoon, H&C. Good to see you, buddy. So, it's a quiet start this week's markets. Not in terms of the trading volume, actually, I might add. We've had some pretty big moves today so far throughout the morning, but that's not been during our trading hours, so it's a little bit deceiving. We actually opened up with some huge gaps over the weekend, predominantly due to the developments between Europe and the US. The Greenland situation is sort of the focus, the real focus of everything at the moment that we've seen. We've had a 14% day in natural gas. Unfortunately for us guys, it's really unfortunate, to be honest. This is natural gas situation. So we were significantly in profit on the Friday. We had a 10% gap in NG over the weekend, and we've hit a high so far of 14% growth on the day. And there's a couple of factors at play here. One is the new revised climate figures for the US, which are looking at a deep freeze scenario. So much, much colder than expected. Looking at ramping up natural gas production as necessary to it's coincided with the reports of that, which has worked its way against us, unfortunately. And also the developing situation, as we already know, the geopolitics, which is coming to the mix as well, which is creating potentially a shortage of natural gas at a time where it's significantly needed and it needs to be ramped up. So because of these factors, they've played perfectly against us. The fundamentals have really played perfectly against us in this scenario. There are a couple of technical factors, of course. H&C, you did raise this morning about the gap being formed. Obviously, the gaps are formed in the first instance by the price action, which is affected by the fundamentals. So it all bleeds back to the same couple of sort of catalytic events. Sorry, get my words out. But ultimately, yeah, it's not good news. It's not good news for us. I mean, ultimately, I would probably expect this to power through the stop loss. We're still in the trade at the moment. We've got liquidity above price action. We don't have our stop loss at the 380 point, which is above the significant point of liquidity and inflection. We've got it, as you can see here, sort of. Sorry, you're not looking at it. Let me just quickly fire over a thing so we can all have a look at where I'm talking about here. Yeah, so we're kind of, the stop losses are about 3/4 of the way up, maybe even a little bit over the point of liquidity, but we haven't got the big one inside the net, so to speak. So, yeah, I mean, it doesn't look hopeful. The fundamentals, as I've said, they are playing directly against us on this one. I mean, we've only got a little bit of risk on the table at the moment. The real net value in this was the sizable risk reward ratio, so it's not like we're going to lose much it's not like we're going to lose much anyway out of taking a loss on it. But it is a shame. It is a shame all the same, because we were significantly in profit before those revised weather forecasts came out, and then of course the addition of the lack of supply and the supply issues with NG as well, which have just played perfectly for bulls. So 10% gap weekend plus another whatever it is today. So far trading, we've had another 3.5, 3.6% added on top of that. So yeah, it's a whopping day, a real whopping day for natural gas, and unfortunately not in our favor. But it's not over yet, and we will definitely be looking to reposition ourselves in this one should it amount to a loss. There's no doubt about it. I will be looking to get back into this ASAP if it's a loss. That's down the pipeline. Other major news, or let's say, I want to rephrase that, other major price action movements today, not necessarily news. We've had big moves across precious metals. We had a 3.8% day so far in silver. All of the European and US indices as well have been taking an absolute beating at the beginning of this week. I mean, the average is like minus 1.1% down so far from the weekend gaps that have traded lower, and we've actually been losing a little bit of momentum even from the open as well. We've had a few bounces, especially across the European indices, which we will look on to. I appreciate I'm not sharing the charts at the moment because we are going to have a look at the charts after the market report breakdown. But there's definitely things happening, and it feels like last week was all about the posturing by the US presidency, president's administration, a lot of posturing going on. And Europe's not backing down. Ultimately, there's more and more nations joining the cause. Greenland's now turned into a bit of a mixed military site with a bunch of countries' military personnel. They're all carrying out quote unquote exercises. Really, it's a massive warning to the US to don't interfere, don't get involved. But the president's administration is still touting it's theirs and there's nothing they can do about it. Which is, it's escalating day by day. This is seriously escalating. We also in the UK have increased the conscription age to 65 years old. That was by the Defence Ministry, which is insane, absolutely bloody insane. And I also read, I think it was on Reuters, that other EU nations, I don't know which exactly, but other EU nations have been telling the UK that we have a serious lack of defense funding. We need to stop pretending like the era of peace and focusing purely on economic growth and power has come to an end, and we need to start realizing that war is likely. And war is the most likely outcome from this point on. If it doesn't end up from being from the US, it will be from Russia, or between the Russia and the US. And if the US calls on us, then obviously as NATO, we will answer that. And so we've kind of got it coming from multiple sides at the moment. And I think that's all kind of really finally all weighing heavily. And investors are starting to get scared, and that's what we're seeing at the moment. We're seeing the real-time price flow from precious commodities and away from the riskier investment opportunities like US stock markets, European stock markets, and those riskier assets. And and that's what's happening. That's literally what's happening in real time right before our eyes. Anyway, all of that aside, it's a crazy time. We've had a big start to the week. Let's dig into the market report and have a look at what's been going on there this week. So to start off with, we've got the US 30 Dow Jones, which at this time remains relatively trapped inside a small range, which is trapped inside a much larger range. Now, the idea for the US 30 Dow Jones this week is to either see a continuation of the stage 1 range, which is between the high up here and the median, or to see the range continue right the way back down to the lows at the bottom here prior to a potential continuation up and away from there. Now, thinking about everything that I've just mentioned, And the fact as well that we do have the US President Trump giving a speech this week as well, which is registered at a 7 out of 10, I think it is probably quite likely that the stock markets may well have a detrimental week rather than a week of growth, which means that in a normal scenario, in an ideal scenario, I suppose we would be looking at shorting it throughout the course of the week, looking at the move back down to at least the median and then a big break of structure on the 4-hour time frame for a longer term intraday, intra-week style trade down to the lows. We will be trading this on a 1 minute time frame, of course, day to day, but there may also be the opportunity where we look at something a slightly longer term as well for the US stock markets. More to follow on that as the week plays out. Up next on the weekly forex pair this week, we're looking at the pound against the yen. We're looking at a break close retest potential for a nice trend continuation opportunity right back to the previous highs. Yeah, I'm kind of on the fence from this one from a fundamental perspective. I think if the yen continues to gain a bid from predominantly through military spending, which is why there's so much demand for the US dollar generally in war times, then the Japanese yen will probably decrease in value as a direct result of that, being that the US is the world currency for military purchasing, and we have a ton of nations at the moment ramping up budgets specifically for that reason. So it does make fundamental sense from a currency perspective, I suppose, to see the yen deteriorate. But I'm not really pricing that in. It is much more of a technical bias and trend continuation play than anything else, although I can see the fundamental benefits of that as well. Moving down into UK Brent, I foresee a continuation to the downside. We had a big ramp up at tail end of last week, but I think that's going to be relatively short-lived, as we've already seen the evidence of. A continuation down to the median and beyond does seem likely, possibly looking at a rejection from the lowest low, which is down at around this area in here, before we start to see a bit more of a demand shift and those assets start to rally back again. So yeah, of course we'll play that out by ear as well and see how we do. There's not really going to be the opportunity, I would say, too much to be trading between these two margins. If you guys can see here, let me zoom right in. So you can see this area in here. So we would be looking to clear the margin away from a break of structure of this low down to there. So it's not a huge margin. On a 15-minute time frame, there may well be the opportunity for us to make a few quid in there, but it's not going to be great. The real opportunity here is either the rejection from this level coming back up to the high, or the alternative, which is a break of structure below the low here, and then the push right back down to ground zero at the floor, which is where we may well see a little bit of profit made there as well. And then finally, everybody, we've got gold. And for me, gold is long. There may be a bit of a deeper pullback, maybe back down to the lows here, but ultimately I am looking long, green and strong in the gold commodity. As far as the geopolitical, political, global economic situation goes, it is risk off market. And we're going to see those safe haven commodities really rally. We really will. It's been a 1.55% day so far for gold. I see that to continue. I really do. There's no reason for the precious metals to lose value. I mean, if tomorrow, whenever Trump's given his speech, and he turns around and he says, "Listen, it was a massive mistake. I'm really sorry. I didn't mean to impose my will," sort of thing on Greenland, and everything gets put to bed and we all walk away, sort of pats on the back. It was a close call and that was that. Then we'll see gold lose maybe 5, 6, 7% of its value, and the dollar will likely remain relatively stable / gain a bit of a bid, and we'll see the stock markets rally through the roof. At this stage, I mean, I'm gonna leave that to you guys. You've all got minds, you've all got your opinions. I think that is incredibly unlikely. So yeah, and that's where we are with that one. Moving down into the market challenges this week, we don't have a great deal of economic catalysts per se. The world is paused on the pulse of Donald Trump right now and what the next situation is going to be with the Greenland event. We've got US President giving a speech this week. Just bear with me. I'll tell you exactly when that is. Tuesday. So that's coming. We've got that to look forward to tomorrow. as far as I'm seeing here. It does say tentative, so it may change, but I think that's going to be tomorrow. So we do, yeah, of course, we do have that to contend with, which is going to throw probably a few curveballs our direction, so we need to be ready for that one. Aside from that, it's pretty quiet. We've got initial jobless claims, which is registering as a 2 out of 10. We've got the US core PCE price index for monthly and annual figures, which are a 4 and a 5. Frankly, I think the annual PCE index registering as a 5 out of 10 is pretty gracious. I wouldn't. I'm not really thinking that is necessarily going to be a 5 out of 10. I mean, it might be. The thing is, this is in accordance to the assets that I've listed here for this week's trading opportunities. It's not broad market impact. So I do agree, actually, that it may be a 5 out of 10 for something like the Dow Jones, where we see some major volatility strike as a result of it. But I don't think, the broad market impact, what's that registered as? 4 out of 10 on that one. So it's probably more in line with what I would think. So that's the weekly view on what's really important and what you guys want to be keeping your eyes peeled on. Everything else is just noise at this stage. Working our way down into the SSV this week, there's nothing of notable call out. The VIX is where it was. Gold's not really changed. Pound yen relatively mean at 53.18. US 30 Dow Jones lost a few, 52.37, but still it's nothing to shout home about. And the UK Brent black commodity down there at 46.21%. I mean, it's pretty close to the mean. So I think everything's just relatively stationary at the moment and waiting for the next big thing to take place before they start to move. Now, working our way down into page number 2 here then, team, we've got the Economic and Order Book Impact Report. In terms of broad market scale this week, the US President's speech is coming in at an 8 out of 10. That's pretty big. We've got initial jobless claims at a 2, US core PCE monthly figures at a 3, and the US core PCE price index annual at 4. So a very, very quiet week indeed, apart from the beginning of the week where we have the US president giving his speech. There is undoubtedly going to be a lot of gibberish in there. However, if he says anything at all that sounds very militant towards Greenland, boom, we're going to get some big old spikes in our markets. So we do need to be prepared for that one. Coming down here into the rest of the indicators. Again, we don't really have too much change across the board here. Very much the same as the prior week. We don't have the economics data releases to really drive any of those. So there's not really going to be too much change. In terms of the equities in focus, got a nice new group for you to consider. Every single one of them this week is actually of worth, but Rocket Lab's taken the lead, and Rocket Lab continues to position itself as one of the strongest small cap beneficiaries of the accelerating space and defense spending cycle, very much in line with where the world's putting their money at the moment, which coincides, as it happens, perfectly with the institutional buying interest by sector. This is direct capital inflows from loads and loads of data sets that I have which link to hedge fund investments. $3.7 billion came in defense over the weekend. 3.7 billion just over the weekend. So you can take that as you wish. That is a big number. That's one of the biggest numbers I think we've actually had in a number one slot for the institutional buying interest by sector. So there is a shed load of money going into military development right now. Second place, AI. That's unsurprising. Fintech actually took third place this week, with clean energy taking number 4. So yeah, all of those sectors they're going to be relatively decent investment opportunities over the course of the next month or two, I would say, based on these figures right now. So just to give you guys a little bit of a heads up here, I know it's boring, but it is mandatory at the end of the day. The information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. If you'd like to read the full disclaimer, it is at the bottom, sent out with every single copy of our market reports in line with regulations. So please feel free to go and check that out. And if you want any more information or details on track record or any kind of thing to do with T's and C's, please feel free to go and check that out on our website. So with that being said and done, let's have a little look around the markets. Now today, ladies and gents, Please be aware that we are not looking to actively trade. It is not, well, it is just that. There's nothing more to say about it. This is not an active trading day today. This is much more about just pure market analysis and really digging into opportunities that we may see throughout the week ahead. And of course, what's been happening so far. So let's start from the top then. Like I say, we've had some really sizable moves this week over the course, well, over the course of the weekend, we've opened up with these big gaps. We closed out up at the highs, dropped a mile down here, and then continue to trade lower as well. We have had a bit of a buyback situation take place since 8 a.m. this morning, and we can see this across the board. Some are a little bit more aggressive than others. I would say the EU50s is sizable in comparison to the other two. The DAX is actually really struggling at the moment, but it's still a whopping gap down. I mean, really, really big gaps. Anybody find me the last time we had a weekend gap like this in the DAX? I think you'd be really hard pressed to find one. I haven't found one for a long time, and I can't be bothered to go back any further. But it's the biggest gap that we've had, as I say, in a long time, which really represents and reflects where we are with the world at the moment. Looking at most of these, I do anticipate these gaps to be filled. I don't think the market's just going to continue sinking in one direction. So I do think the gaps are going to be filled for the most part, but I think it's going to be a slow, very gradual process, followed up by a continuation to the downside. If we look on the daily time frame, we can see that we have made a huge jump down towards our target of retesting these major points of liquidity. So for example, this one here, we didn't even come too far away from that one, although I do see the continuation back up to the highs probably being the course of action. I do foresee the continuation back down to around 24.81. For example, I'll give you a very broad example here. If we break through, or a very broad forecast, let's say, if we break through like this area in here, for example, this is our last line of defense. If we break through this area, we're bear market territory for me, because that represents a fall from the highs. Where are we here? So that represents a fall from the highs to a break and structure down there. That's a 4.4% wipeout. And I think if we get down here, it's then a path of least resistance straight the way down to about there, which means in total, loss from the high of the move is going to be about 8.5% shaved off the top, which basically encapsulates the entirety of 2025's trading cycle. We had this big move at the beginning of the year. We ranged from April through to, oh, well, that's January. That's Jan, isn't it? So yeah, we spent the rest of the year there. The entire year was in that range. So it's going to be interesting to see what happens. If we break through the floor of the range, I mean, bang, you know, we're looking back down at around 1940. And that's going to be, that would be 16. That'd be a 20-25% loss. Looking at the UK FTSE, again, first point of call is back down there at around 99.24. That's going to be a pretty sizable move, but no way is that going to be representative of bear market territory. I wouldn't consider the UK FTSE in a bear market until we at least break down through 96, which is much lower. So just for perspective's sake, high up there down to around 96 is going to be a 6.4% move lower. We break through this area in here, then I would consider us potentially being bear market territory. And then finally with the EU50, I don't think it really matters to anyone when we consider to be a bear market territory. Ultimately, guys, if the DAX falls that far, the EU50 is going to go with it. So that's just going to be chain liquidation from that point on. Now, in terms of what's been going on with our US indices, the US 30 Dow Jones has already reached, this low down here at the moment. It's not really done much of anything otherwise since we've reached it. As we can see here, big gap down. We've moved into liquidity. It has remained stationary since then. But the NAS 100 here is actually down at 1.37%. At the low was down at like 1.7. So that's a big move down. And we are trading in liquidity at the moment. I did send you some thoughts that I had inside the Traders Lounge. If you haven't seen those already, you can check those out. But I think it might be a decent opportunity to buy into the NAS 100. And yes, we've got a lot of reasons for the stock markets to sell off, but in times like that, I imagine the US tech stocks are going to be somewhat resilient. So it's something that we've never had to prove before, thank God. But I do think the US tech stocks may be a little bit more resilient to what's been going on around the world at the moment. Even though we've had a whopping sell-off today, opening up the week very weak in terms of weakness versus strength. I think there might be some decent buyback opportunity if we can sustain this level at around 25, let's say 25, 26, 25, 25. So we'll have to wait and see on that one. The breaker structure would be at about 25.30, and then we'd be looking for the target profit up at the highs there at 25.75, and that would be a healthy trade. That would be a very healthy trade. Looking down at the S&P, it's down 1% today. It was down at 1.3% at the lowest low. Big gap down, in line with everything else that we've seen so far. For this one, yeah, I mean we're at a sort of intraday floor anyway at the moment. I think a buyback works the same way on the S&P, but it will probably be a little bit more slower than the NAS 100, I would say. Not quite as volatile, not quite as sharp in its trajectory. I think it would probably be a little bit more of a grind for the S&P. So other things, obviously notable call out in gold, 1.5% so far. It was up even higher than that, around 1.9 to 2% growth. I think we will come down, retest this level or this one. One of the two needs to be retested and then we'll get going again. Silver, 3.49%, 3.5%. It's not doing anything right now. Obviously, we're getting into the afternoon session now, guys. It is 2 o'clock in the afternoon. The US Open for commodities and FX market would have historically already taken place, but it is obviously not happening today, as it's MLK Day in the US, so there's no trading, which obviously is, very, very much explained in the price action that we're seeing here, as nothing is happening whatsoever. In terms of the FX space this afternoon, again, very much the same. Not too much going on over and above what's already taken place this morning. We have the Aussie CAD, which is still running at the moment. It's currently at 93.094, about 55% towards target profit. It has been repeatedly rejecting the median, the breaker structure point up here, which is the one that's used for short trades from the highs. It's definitely got its work cut out for it. We're nowhere near, obviously, the stop loss, as you can see, yet, but we will need to make a decision before too long with what to do about that one and whether or not we should pull its legs out at around 93.20 or just continue to let the thing run. Euro NZD at the moment continues selling off. We've got the United States dollar currently trading at 99.125. It has rejected this area in here and is coming down at the same time as the stock markets. Again, very telltale signs of the situation that it's trading in at the moment. I'm not sure how far it's going to go. If the situation continues to develop, then we will see it continue to sell off, I would say, to a certain extent before there starts being a fundamental demand for US dollars. Let's hope that day never comes, but it is just unfortunately how economics works. If there is a significant demand in the dollar and the dollar starts rallying up, then yeah, I suppose we'll do what needs to be done. We'll do our jobs. The rest of it, though, at the moment, yeah, I mean, there's not too much more to comment on at this stage. FX markets today have been pretty quiet, and I'm talking about from the European Open this morning, not the weekend gap. The weekend gaps have made a lot of these things look really, really good, but the actual fact is, from the European Open at 8 a.m. this morning, we haven't seen much of anything. The most of the action happened overnight in the Asia session for a lot of these instruments. Yeah, a lot of sideways stuff so far, but that's fine. We're gonna work it in. We're gonna work it into the portfolios tomorrow. Tomorrow is going to be a full capacity day. We are going to be looking at all the asset classes, indices, metals, FX. We're going to get them all plugged in and ready to go. And yeah, we'll take it from there. The only major thing we have to contend with this week, as I've already mentioned, is the US president's speech. That's the one that we're going to have to be really, really focusing in on, see what kind of terminology he's using. I know it's a lot of dribble most of the time, but there's going to be something, I'm sure, and the markets will be reactionary more now than ever. Honestly, you know, the situation that's unfolding here is going to be bigger than the Ukraine situation. It's going to be, you know, bigger than COVID times if this all really does kick off and end up somewhere we don't want it to. So it's going to be very, very sensitive to any kind of information that the administration gives out, or Trump himself. And of course, EU as well. Yeah, of course. Yeah, sure thing, Tim. Not a problem. Not a problem at all. Let's just get my DXY back. I think I've lost it. Yeah, I have. Right, let's have a look. BTC. It's having a bit of a buyback day, but it has been in sell-off mode for a while. Yeah, so nice big sell-off here. We have a little bit of a buyback. It has come down though, still on the current candle. If we look up the daily time frame, try and consolidate some of the noise. Not looking great. It's not looking great for BTC. We've got a break close and a retest liquidity right there, which is good to see. We've got, I mean, I'd like to say that that's the floor in there, right? But it makes no sense to the left-hand side. So I think the real floor is probably more down there. And so we've broken through here. We've got a real sort of nice big deep price action corrective, a nice retest. And now we've collected more of the orders, and we're now going to see the continuation of the downside. The thing I would like to bring to your attention is the fact that we've got an absolutely stunning ascending level up through there at the moment. That's really, really nice, and we have a really decent trading margin to be able to work with. So if we use, you know, like this, for example, that in there is your trading margin from this blue line to that blue line. If you want to add in a liquidity for block for breaker structure as well in there, it's absolutely doable. We can look at something like this just to make sure that we're clearing the way through that liquidity. Blue line, block there, enter the trade, taking profit down at around 77.50, which is a decent round number as well. You know, it's not 75, but it's the next one. It's the next best one. So good opportunity for continuation of the downside. I wouldn't want to be buying into Bitcoin at the moment. And again, this all comes back to the fundamentals. If we start seeing demand for dollar soon, and in the kind of levels that we're talking about, BTC's can get slammed. So we'll have to wait on that one as well. But a decent shorting opportunity in there, Tim. That's what I think. I didn't get the last one wrong. We'll just have to see. We'll just have to see. Yeah, no problem at all, bud. Right, team. I'm going to wrap things up there then. We are currently at around just coming into 2:05. I would like to thank everybody on the outside of the community and the inside of the community today for joining me. This session today is going to be beneficial for both those who were participating in real time, but also those who are going to get this on catch up. And for those of you on the YouTube side of things, remember you can download your own copy of the report inside the trading room. There's no extra cost. There's no paywalls or anything like that. You come in, you can download your report. It's all there for free, and it's released every single week, on a Monday morning. So please feel free to do so. You are more than welcome. Have a great rest of the day, guys. Take it easy out there. Let's get ourselves ready and raring to go for tomorrow, where things are going to really pick up. And yeah, good luck. Cheers, team. Catch you then. Thank you. Bye-bye.